Hi, everybody. I'm Jennifer Pasqua from Serendipity Media, and I'm going to be facilitating a conversation with Bill Caldwell, CEO of Caldwell CPAs, and you may recognize him as a regular speaker in the SYTA community. Bill, good morning.
Good morning.
So we're asking that as you're joining in the conversation, you mute yourselves and utilize the chat feature. You can see that at the bottom of your screen. All you have to do is hover your cursor right above it. So if you can do that right now for those who are joining in, make sure you place your mute button on, and then we'll go ahead and get started. So Bill, first of all, how are you doing?
I'm doing wonderful. How are you today?
Good. Staying safe and healthy is what we're all trying to do right now. Let's get right into it. I know that the president, of course, signed the CARES Act into law last Friday, and the Treasury and SBA are working to implement the many relief and loan programs. It can be very overwhelming and confusing. So we really appreciate you providing an overview for our callers today about how these programs can help them and their business in terms of moving forward. So we've gathered all the questions from our SYTA members prior to this call, which we hope to be able to answer today. So if we don't get to all of them, we will schedule another one of these meetings and follow up with them as a resource on SYTA.org. And Bill, of course, everything changing so swiftly, isn't it?
It is. I mean, it's changing literally, not by the minute, but at least by the hour, it seems like. There's a lot of guidance that's just now starting to come out, particularly from the SBA, about how these loan programs are going to work. Today also, of course, is the first day of this expanded federal Emergency Medical Leave Act. So that has got a lot of people confused and asking questions. And we'll deal with everybody's questions here, and I'm looking forward to that. Each person is going to have a different answer depending upon their unique circumstances. But I will try to be general, but tell people, where I'm being general as opposed to specific on this. So we're looking forward to it. And there's a lot of questions based upon our phones ringing. And I'm sure with this, the SYTA community so devastated by this virus that they're going to have. I mean, this is really personal. To them and to small business owners. So we'll try to give them the best answers we can.
All right, Bill. So first and foremost, can you explain to us in layman's terms what the CARES Act is all about?
The broad picture on the CARES Act is this is the third act that's gone through Congress in the last 2 weeks to try to give financial relief to individuals and small businesses that have been impacted by all of the shutdowns that are going through due to the coronavirus. So that's the really, really broad picture. As all of you followed this act through this circus through this congressional circus over the last week, this act is literally the kitchen sink, and everything got poured into it. From attempts to deal with airplane emissions and automobile emissions to a variety of things. But the main pieces to it that affect all of us is that first, we're going to get this emergency tax refund, if you will, of $1,200 for an individual or $2,400 for a couple, plus $500 for each dependent child. Now, this emergency money is going to take a bit to get to you. And so I would not expect it for at least 2 to 3 weeks. And for some people, it could be 2 to 3 months before this money gets there. There is an income limitation on it, which means that an individual making $75,000, making at least less than $75,000 will get the full $1,200. If they're making between $7,500 and $100,000, it'll get phased out. So anything basically over $99,000 that an individual makes is not going to be. They're not going to get anything of this. The same ratios are true with families. $2,400 for a family making less than $150,000. And it's being phased out between 150,000 and 200,000. So anything over 200,000 for a family is not going to get anything. Now, this is based upon, first, they're looking at the 2019 tax returns that have already been filed. So that's where the IRS is getting these numbers. If there's not a 2019 return on file, they're going back to 2018. So some people may have qualified in 2018, but don't qualify because they make too much money in 2019. So in that case, we're telling them to hold off filing their 2019 returns because they'll base it on 2018. This refund is not taxable, and nor is it reclaimable, so that if you made too much money in 2019 and you had gotten it based upon 2018, they're not going to come back and look for the difference. So that's one component. There's a lot of loan components to it. And then, of course, you've got the two other bills that have already been passed in advance that have to do with people, that employers with less than 500 giving their employees that are still on payroll 2 weeks of extra sick time for this virus, or for caregivers, or for people whose babysitters have canceled. So it is a huge bill. It is the largest relief act ever passed by Congress in its history. Some will say, and a lot of Congress will say, that this is not going to be the last part of this Relief Act. From what we're seeing, almost every small business in this country is being impacted. So I fully expect 2.5 to 5 million loan applications going in the next week.
Absolutely, yeah. Bill, one of the things as you're talking about this CARES Act are the different programs and also the SBA loans that are available to those small businesses, just like SYTA members. How can they determine what is really best for their situation?
Well, SYTA members in particular have a couple of options here. That they qualify for the old SBA program called Economic Disaster Loans. Those loans are bigger. It's up to $2 million, you can get up to $2 million on this loan, and they are paid back. They're not forgivable. So that they're basically set up as a 30-year note at 3.75%. So that is available to everyone, including SYTA members. What makes them attractive for SYTA members is that it's easy for the SYTA member to prove damages, because that's one of the pieces to these economic disaster loans, is that you have to be able to prove damage. These are set up under the old SBA rules, meaning old like that existed 2 weeks ago. And there's a lot of information that is going to have to be accumulated and submitted. So these are available to SYTA members. But what everybody's talking about now is these forgivable loans, which are called these Paycheck protection loans, that everyone can apply for. You don't need to prove damages. You just have to certify that you have been damaged in some way, shape, or form that's kind of undeterminable. And it's based upon your average monthly salary. And that monthly salary, and so you calculate that average monthly salary, and if you want, we'll get down in the weeds on that later. But and then you can borrow up to 2.5 times that average monthly payroll cost. Those loans are forgivable if the money is used properly over the next 2 months. We are seeing these loans from as little as 20 or 30,000 to as much as $1.5 million right now. If used properly, and you have restored payroll, amount, meaning the number of people, you've rehired your staff, that entire amount could be forgiven within the next 2 months. If you don't rehire all of your staff, or you use it for things other than the prescribed costs, then those loans then will be basically a 2-year loan and at 4% interest. So it's still an easy to get loan. It is just portions will be forgivable and portions won't.
All right. So, Bill, let's move now to the Paycheck Protection Program. I know that many SYTA members are looking for some sort of guidance on whether to lay off or perhaps retain staff under this program.
Right. Well, let's deal with the program first, and then we'll separate that question into whether we lay off now or whether we don't. And I'm willing to bet a lot of our SYTA members have already laid off their staff, a lot of staff on this over the last couple of weeks. So whether you've laid off staff or whether you don't, it isn't part of this formula for how much money you get. How much money you get, the easy answer to this is you take your 2019 payroll costs. You take any health insurance that you have paid, you take mortgage interest, and you can count your subcontractors as well. So that would be your guides and your tour directors that are independent contractors. So you take all of that data for 2019. You turn around, then divide that number by 12, so that now you have an average monthly cost, and multiply that times 2.5. So you're getting 2.5 months of costs related to payroll, independent contractors, and this. And so that's a really easy formula. We will publish a spreadsheet to help our SYTA members calculate those numbers so they can just pull them off their 2019 tax returns or pull them out of QuickBooks to get that number. So on the applications that are now out on the web, and we'll figure out a way to send people these numbers as well. The application is really simple. It's 3 or 4 pages. The application says that it can be completed in 8 minutes. It is going to, apparently it's going to go through your local bank, and your local bank basically loans you the money, and the SBA guarantees that loan or deals with the forgiveness of that loan to the local bank. So the money is going to come from your local bank. They are all scrambling right now, as you can well imagine, because nobody had even heard of this until last Thursday. And the SBA is just now releasing guidance to the banks, and so the banks are now dealing with this. So beginning on Friday, it looks like that the banks will start accepting these applications. And these applications need to be in by June 30. Conventional wisdom from my bankers are encouraging people to file even though they're really not ready to lend yet, so that they can get in queue. Everybody is worried about running out of money because I think the number is $345 billion have been allocated to this. And that's not going to be enough. So I am personally thinking, my personal opinion on this is that Congress will go back once they see the magnitude of these loans and allocate additional monies to this. So I'm not envisioning that they are going to run out of money, but the sooner we get this process started, the better.
It's a lot to digest, Bill.
It is.
Fortunately, we're recording this so that people can back up, rewind, re-listen. And again, things are always going to be changing. So I'm sure we're encouraging people to ask those questions. And under this program that you talked about, this Paycheck Protection Program, what about if you hire independent contractors? Did you mention whether or not they can be counted, or seasonal employees perhaps on a 1099?
They both can be counted.
Okay.
And therefore, seasonal employees, there is a different provision on what formula to use. For independent contractors, the same would be true. You can basically the employer can borrow, or the tour operator can borrow the money from the SBA that they use then to pay the independent contractors and pay their seasonal employees on it. The borrowing the money is going to be the easy part, believe it or not. This is the equivalent of really a low doc loan, in that there is very little that it appears right now, unless the banks put an extra layer on this, they're going to need very little documentation. Maybe a calculation on how this monthly payroll number is being calculated. That may be the only document that they're going to need, other than the application. The application only has the one number in it, and the number of jobs that they had. And then the rest of them are yes, no questions, really trying to weed out felons and other people who should not be, who cannot be getting these loans. So the application part should go fairly quickly. Everybody is really interested in this for the second half of this, which is the forgiveness of indebtedness on this. That's really why everybody is excited by these, that they might not have to pay back the loan.
Yeah.
That calculation is really unique in that once you get the money, a clock starts for 8 weeks. And during that 8 weeks, the tour operator would then need to turn around and deal with paying employees, paying independent contractors, paying seasonal employees if applicable, paying their rent, paying health insurance, paying interest. Those items are the only things, and paying utilities. Those items are the only things that this loan can be used for. At the end of the 8 weeks, the tour operator has to turn around and give an accounting to the bank, which then grants forgiveness based upon the rules here. And so that that money has to be used. That money can only be forgiven if it's used for those items, nothing else other than those items. And basically, if you look at how many employees and independent contractors that the tour operator had, take last year as an average and compare it to the number of employees and independent contractors and seasonal employees that they had during this 8 week period. So that's a fraction, this 8 week over the total of last year. If that number is the same, then all of the money is forgiven. What is probably going to happen for the tour operators, though, which are unique, is that number is not going to be the same, because they're not going to need to rehire employees because they've got no business.
I think this is a perfect time, Bill, to bring Carol Ann into this conversation.
Okay. Sure.
Carol Ann, you want to join us on camera if you could. This is a lot of information that many SYTA members are wanting to learn and, of course, have answers to. I see that the chat is going right now, so we're trying to get to those comments as well. So let's see if Carol Ann can join us. Carol Ann, are you there?
Yep, I'm here. I just wanted to follow up, Bill, just to explain a little bit more what you were just talking about with regards to, you're correct, that because they didn't run the tours in 20, they compared to the staffing they might have had last year when it comes to those independent contractors and tour guides. what about if they were already under contract for the tours that were canceled, and therefore the tour operator may have gone ahead and paid those tour guides?
It's only going to, what the only thing that is going to count toward this is the number of employees and tour guides that they have during this 8-week period.
Okay, that's really helpful. One of the questions that came up, which is interesting, is if you are on the owner and say you didn't collect a salary, can you in fact count yourself under the PPP?
Yes.
Okay, great. So then essentially then, how do you verify your compensation over that period?
Well, it looks like you would have to, we're going to run it through a payroll. And so that payroll reports are going to be the verification during that 8-week period.
So if you look at last year, though, let's say if you didn't take a salary last year and then you do it this year, I think it's just, again, sort of clarifying that comparison to last year to this year.
Yeah, I would include the owner in last year because they were being compensated only differently on this. And so they're going to be in the numerator and the denominator in this case, meaning that they will be part of this 8-week employees and they're part of the total from last year. Okay,
great. Just another follow-up question. What happens if you hire additional staff, as a result of it? Will the loan be forgiven?
It only if it happens during this 8-week period.
Okay. So the 8-week
period is the key.
Okay, great.
And just because you had, an employee last year and maybe they left or you laid them off and you've replaced that employee during this next 8-week period for this year, then that still counts as one for this year, one for this 8-week period. It doesn't have to be the same employee.
Okay, great. And a follow-up, is the 8-week period from the time the loan starts, or can it be adjusted, say, from March 1 to April 30th?
That's the really sad piece to this that really is going to negatively impact the tour industry. Okay. It has to start when they get the money.
Okay.
And it's not only the restaurant. I mean, the tour industry, the restaurant industry, and good portions of this country. Maybe let's say that they've able to get the money by May 1. Then the 8 weeks starts from May and June, and we don't know what's going to happen between May and June. We may not have any employees during May and June, other than the owner.
I see.
So, in that case, we would get very little forgiveness, but we do have a 2-year loan then at a reasonable interest rate.
Okay, as a follow-up question, a couple have asked, for example, if employees were paid a bonus, as a result last year, can a bonus be counted? Can payments to 401ks or any other funds that employees might receive from the owner or from?
Absolutely. So as far as the bonuses, it's the definition of compensation is extraordinarily broad and basically means any money given to the employee, whether it's a commission, whether it is a salary, whether it's hourly, whether it's a bonus, whether it's severance pay, however you would define the broadest definition you could possibly come up with salary is the definition they're going to use on this. And if the employer, so that's the first part of your question. The second part of your question regarding 401k is in part of this calculation, if the employer is providing a 401k match or any kind of pension, whether it's a SEP, a simple, a 401k, that money is included in this calculation of how much money we can get and we can borrow.
Okay, great. We had a question with regards to the family relief payments
Sure.
for S corps. If we could talk about that now. For example, is the total income based on the W-2s or the total corporate filings? If you could speak to that, please.
Help me again. I'm sorry. I'm missing the piece to that.
So just working with a question from one of our attendees in regards to qualifying for the family relief payments.
Oh, that's the, yes. Okay. Those family relief payments are what we were referring to as this income tax, this $1,200 per person that we talked about earlier. And that is really based upon adjusted gross income. So if you were an S Corp owner, that's part of the $1,200 that we're referring to, that everybody is going to get, provided their income is in those brackets that we talked about earlier. Small business owners, that will include the income from their pass-through entities, whether they're partnerships, S corporations, or Schedule Cs. So that will disqualify a lot of our small business owners because of the income limitation there.
I see. As a follow-up question, if we could just speak to the EIDL loans a bit. Our understanding is that the $10,000 would be forgiven if you apply, for the EIDL? That's
correct. They'll give you $10,000 supposedly within a week on this. And that is a forgivable portion, whether or not the loan is approved or not. The issue is going to be twofold with the economic disaster loans, which are the SBA has had for years. They've just never been used. They've only been used for physical disasters, never for a one caused by something like a virus. The downside to those are, yes, $10,000 of that is a forgivable piece. You can borrow up to $200,000 fairly easily under the new relaxed rules that Congress had as part of the CARE Act. And these relaxed rules say that basically the bank decides that, or the small business decides that loan, and it's strictly a function of the credit score, the person's credit score on this. $10,000 of it can be forgiven, and the money can be used for far more things than the limited amount that the Paycheck protection loans are. But if you borrow, let's say $200,000, only $10,000 is forgiven. The other $190,000 is basically a 30-year 3.75% interest.
That's thinking about filling out those loans, and I know, Jenny, we've had this question come up, is a question with our members now holding refunds and deposits, in their checking accounts or in their business accounts. How do they, when filling out the loan, reconcile that as part of the loan process?
Well, any money that they're holding as deposits from their customers is not their cash. So I am not, when we're filling out these loans on behalf of our clients, I am not including, I'm basically taking the cash position minus the deposits, and that's what we're reporting as cash. For the prepaid expenses, that the monies that have already been advanced in 2019, to put deposits in for, airline tickets or hotels or attraction tickets, we are taking those as expenses in 2019 for our clients, because at this moment in time, we are unclear on whether or not we're going to get cash back, because some people seem to be giving us cash back, or some other hotels and things like that are giving us a coupon to use in the future that we really don't know we're going to need or not. Or they're holding it, the airline, some of them are giving cash back, others are holding it as as deposits for future use. We are saying that there is enough uncertainty. We're writing off all of those expenses in 2019. The benefit to doing that is for some of our clients that have large numbers there, that will drive their profits negative for 2019. Those negative income will pass through and now is eligible. You can carry it back and get income taxes back from 2018 and 2017 and 2018. So we're trying to get some prior money back. Anything we can't use carries forward, so that even if we get money back in the future, we have to recognize that money as income. We've got prior year losses to offset that income. So we're trying to, for our tour operators, drive their income in 2019 as low as legally possible, so that maybe some of them now qualify for that $1,200, and we can get money back from 2017 and 2018 taxes as well. So we're trying to put as much money in our operators' pockets as possible, so that they can weather this storm.
Great. Jenny, did you have some more questions that came in advance on your list? I want to make sure that some folks send in their questions in advance, and then some of them are on the call right now.
Yeah, I know that there's a multitude of questions in regards to that Paycheck Protection Program. So if we can rewind and just go back to that, so we can make sure we're hitting all of the questions that everybody has and they want answered. Back to the Paycheck Protection Program.
Sure.
As a business owner, Bill, as a business owner who collects a salary, can you be laid off and participate in this program or collect unemployment? That's a great question.
It is a great question. And the answer is yes. So that we have laid off a lot of our small business owners with the thought that we will bring them back when and if these paycheck protection loans come in.
Okay.
We're also doing that with a variety of their staff as well. A multitude, I would think, and Carol Ann, you probably know the answer to this better than I do. I would think a very large percentage of your tour operators have already laid off a significant portion of their staff. I
would say that half and half. I know a lot have been waiting for the guidance to come out. That we've just seen. And I know that information is starting on Friday with the Treasury and Small Business to go ahead and start applying for those loans at this time.
So based upon the formulas that we have, so let's say that you're a small tour operator and maybe you only have 10 full-time employees, not including tour guides and all of those other kind of people, 10 full-time employees. And you haven't laid off anybody, and you don't want to lay off anybody on this, that you could lay off lay off people, let's say today, and let's say it takes a month for you to get the money from the Paycheck Protection Program. So you lay off today. Your 10 staff, they all go in, including yourself, they all go and file for unemployment. In unemployment, they can get whatever their state rate is, plus $600 of federal unemployment money a week for this period of time. Okay. So for most people, that will be somewhere in the neighborhood of $700 to $1,000 a week that your staff could be getting on unemployment. Let's say it takes a month then to get the money back, to get the money from the Paycheck Protection Program. At that time, you could, if you needed to or wanted to, rehire everyone.
Okay, I was just going to say, Bill, if you've already laid off the staff, can you bring them back under the PPP? Is there a window or amount of time that you must retain them under this particular program?
If you're looking for, under the program, you're not required to bring them back. Under this program, but if you want forgiveness of the loan, your census of employees has to be equal to your census in 2019. Meaning by number, if you had 8 employees in 2019, then you would need to have 8 employees for the next 60 days after you get the loan. So basically, you are borrowing money to pay your employees for 2 months, and then the government will forgive that debt that you borrowed. But at the end of 2 months, you're still back in exactly the same situation you are right now. The disadvantage to this Paycheck Protection Program is that it is a 2-month gap. And when the governor of Virginia has already issued a stay-at-home shelter at home for the next 45 days on this, that's 45 days out of your 60. For the tour industry, this problem is not going to go away in 60 days. If the lights come back on in Broadway, then you're right. The restaurants might be open and they might be up and running again in 60 days. So they could bring the people back and be back for good at that point. The tour industry is not going. That just isn't going to happen. So it's a Band-Aid on their problem.
Bill, let me ask you this. We have some that are inquiring about the fact that they are an S Corp. They want to know if they can lay themselves off, collect unemployment, or take advantage of the extra $500 per week.
Yes, they can. The unemployment rules have really been relaxed by this CARE Act, so that not only S Corp owners who could always have done that because they are a corporation and they get a paycheck from their company, they could always have done that. But what's really new is that self-employed people or unincorporated owners can do that now, as well as just self-employed people. All the tour guides, all the tour directors who are operating just freelance, they can now file for unemployment as well. So that is a really new piece to this unemployment that will help put a Band-Aid on this. If you're not called back, this 600 or 700, the 700 or 800 to 1,000 a week that people will draw on unemployment will continue for 4 months. And then the Fed piece runs out, and they're already going down to, then they would only go back to the state level at that. But once again, we don't know what's happening on an hour-by-hour basis here, let alone what the economy is going to look like in 2 months, or 4 months in this particular case. But we do know that among the SYTA membership, this is going to be this is not a 2-month problem or a 4-month problem. This is a much longer problem.
I have a question, Jenny.
We have time. I was going to say, I think we have time for maybe a couple more questions. Carol Ann, do you want to go ahead?
Thanks so much. So a quick question came up is an understanding between furloughed employees and laid off employees who may be collecting unemployment. And our HR company said that you need to be careful as furloughed employees. If you ask them to work or they answer emails or do any work, they in fact then need to be paid salary or to be back on as salaried versus laid off employees who are collecting unemployment. Can you speak to that?
Yeah, and I agree with that assessment that, in some ways we like to use the word furloughed as opposed to laid off because it just sounds better. It's easier for us to digest as as small business owners who, these employees are part of our family. The reality of it is that for their sake, we want to refer to them as laid off, and they are not without a promise, really, of going back, because we don't want state rules to say that, well, if you're going to be laid off, but you're going to go back in a week or 2 weeks, then that's the different unemployment rate. We're trying to get the maximum unemployment rate for our staff on this. I would just tell the employees that we in the future when we reopen, we will be back, but in the meantime, we really can't be asking them to do employee things.
Bill, our understanding around unemployment certainly is on a state-by-state basis. And so
Correct.
A question came in that maybe it's not good to go ahead and apply for unemployment without W-2 pay until the states have figured this out. Do you have any sense or anything about that?
Well, Congress has allowed it. So worst case scenario would be if you would apply, the federal $600 would be allowable on this. I think the states, I would go ahead and apply on this, and I would not wait for. I mean, the states can reject you, but I wouldn't. I wouldn't regard. I would not do this, but at the same time, I would listen to the wisdom of the state on this. I guess that's the answer to it. We're not experts on all 50 states, and we know that some are moving very quickly and others are not. But I would, if the state is not going to allow it at this time, then be ready to do it. The federal stuff should still work.
Okay, great.
I know there's a lot of questions that are filtering in right now. Carol Ann, do you have any more that you want to address?
Right now, what I think we should do is I'll collect those questions and then reach out to Bill and others in the future. So Jenny, I'll hand it back to you.
Okay. Well, again, thank you so much for taking the time, Bill, with us and sharing this information. To SYTA remember the information shared today in no way reflects legal advice, nor does it reflect the recommendations of SYTA. Every company should use the advice of their own legal counsel and financial advisors. So, Bill, again, thank you for taking the time to share your knowledge. This has been extremely helpful. And like Carol Ann said, this webinar is being recorded, and we will be following up on questions that could not be answered today.